Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond and it is May the 13th, 2021. It is 5 a.m. Eastern Standard Time. Let's begin with what we're going to talk about first. First off, we're going live. It's Thursday. Yes, you already knew that. But Thursday nights is when we go live, 6 p.m. Eastern Standard Time on YouTube. If you're not on our email list, there's a link below. Sign up, get alerted 15 minutes to a half hour prior to was going live. What do? What we do is we go over the weekly charts. How are we poised to close out the week? Because Thursday nights begins our strategy session for how we're going to be positioned moving into next week. We are playing checkers. I don't believe I just did that. We are playing chess here, not checkers. I'm on my first cup of coffee. Bear with me. So what we want to do is we want to strategize in advance of the closing bell on Friday. Then on Saturdays, we meet up with members and we review the closing price action of the stock market, and we go do a deep dive into how the markets close, where do I think they're going, and of course, we review our positions and our watch stocks for the new trading week. If you're not currently a member, use the link below. 14-day free trial offer to the Contrarian trader. And if you sign up now, folks, you get free. If you're signing up for silver and gold level, our sponsor, TrendSpider, free. Automated technical analysis. Automate your grunt work by speeding up your technical analysis, improve your accuracy, and reduce costly analytical mistakes by using their automated trend line functionality. If you do that, you could survive markets like this where people are buying on hope that the stock market won't go down further. Hope is not a strategy. When you use automated technical analysis, you're buying at support levels as identified by the algorithm. This is not a market to go blindly throwing darts at the board at any one particular stock and buying them up. The market hates beta right now. So if you want to buy your Teslas, you want to buy your Neos, you need to take a long-term approach and look where historical support levels are. So find winning chart setups with their scanners, time your trades with precision with their trade alerts functionality. I'm going to show you how to use that later on. And there's a link below. Get 35% discount code with the Contrarian Trader. That's the cheapest price on the web. You can take a 7-day free trial with them, 14-day free trial with me. Watch the demo of the software. And of course, they have TrendSpider University. You're never left on your own. So sign up, 35% discount code below. Let's get to the markets. All right, this morning, folks, we have a very big number coming out. That's the CPI, the Consumer Price Index, the measure of inflation at the consumer level. Now, the Federal Reserve likes to do something really sneaky. When they use the CPI, they use the core CPI. Conveniently, what's not included in the core CPI, food and energy, which are both growing double digits in inflation. Excuse me, this was released yesterday. I apologize. And we had a big beat. So that core CPI, again, first cup of coffee, folks. It's 5 a.m. Give me a break. Sorry. We had a big beat on inflation yesterday. Now, what happened? We had the dollar rise and yields rise with the price of gold and silver tanking. Now, I was asked, do we bail here on gold and silver because they're not doing the right thing? No, they're going to be going in the right direction because eventually these traders out there who are bidding up the dollar on hope that the dollar is going to recover because yields are going to rise don't get the fact that yields aren't going anywhere. Not if the Federal Reserve has their way. And ultimately, the dollar is a flawed currency right now. And the only reason why I think you're seeing such a massive rise in the dollar is because you're seeing selling of equities and money moving into money market accounts. So if you get a bounce in this market, watch the US dollar. You may see a pullback on the dollar. The dollar is up this morning. I already took a peek. Now, getting back to reality of where we're at today is, of course, Thursday, and we have initial jobless claims today. The market is expecting 500,000 new jobless claims. Very sad. Hopefully, we see a big miss here, and they come in a lot lower. But unfortunately, the government has made it so that people have no inclination in the lower wage tier jobs around the minimum wage and slightly higher to go out and get a job, stay home, collect a government check. That's what they want. Tomorrow, retail sales. Oh, and later today, I've skipped over this, the producer price index. This is the measure of inflation at the producer level. So this is going to be interesting. Are producers passing along their inflated costs to consumers? Meaning, do we see a higher print here than we saw on the consumer price index? That's going to be very interesting, because if we see producers absorbing and not being able to pass along prices to consumers, brother, talk about a squeeze on margins, and you'll probably see more weakness in the stock market. Watch out for producer price index. Tomorrow, retail sales and consumer sentiment, big numbers. Let's get to the pre-market activity. All right, so first up, the dollar. The dollar is up yet again. This is a 4-hour chart. These will all be 4-hour charts unless I say otherwise. Buster Stocks, how you doing, man? Haven't seen you in a while. Good morning to you. Buster Stocks, sorry. Again, first cup of coffee. Making a lot of errors today. I'm not going to get my Golden Globe. I'm not going to be able to turn it in like Tom Cruise. All right, dollar. New daily high. We do have resistance up here, though. We're pulling back off the highs. I think we may recover and tap this upper band of resistance at just shy of 91. Maybe they'll overshoot. But just expect a bit more strength on the dollar. Folks, if you're looking to buy gold, you're looking to buy silver, this is the train is leaving the station. This is your opportunity. Speaking of currencies, Bitcoin took it on the chin last night. Let's see where it is now. Wow, it just kept falling. Elon Musk came out, said that he would no longer be, it was a really weird headline, but that's typical for Elon, no longer be accepting Bitcoin because of environmental concerns. I guess that has to do with the farming or the mining of Bitcoin. I don't know. I didn't read the article. But Bitcoin is weak here. We'll go over the closing price action tonight on Thursday Night Stock Charts Live. We'll talk more about this on the weekly time frame. Maybe we'll recover here somewhat. Maybe we won't. I don't know. This appears to me to be a bear flag setup. I shouldn't be using the 4-hour chart, but we're in a rush here to do this. They're trying to stabilize it here. The market will tell us which way it goes. If PPI comes out very, very hot, I suspect we'll see a bid under Bitcoin. If it does not, if it comes in weak, we may see some weakness on Bitcoin. Right now, it's down nearly 8%. Let's take a look at gold. Now, gold, we do have a new daily low here. We're still firmly above the 1800 mark on gold. That's really critical psychological support. I don't want to see that level broken. Now, what we did do here, we are long of the gold mining stocks and the silver mining stocks. And what I did was I put in an event, and you can see that yesterday we had a pullback. Now, I had sold the 75 covered calls right about here. And we had a profit, not a huge profit, a profit nonetheless. But I said, you know what? the implied volatility on the options are very, very fat, meaning they're expensive. I'm going to book my profits here, and I'm going to roll out to the 90 strike expiring in June, the June 25 covered calls. So now that gives me, because if we see recovery in the gold mining stocks, it gives me a lot of room to the upside. Basically, a little over a 1 standard deviation move. So you could, and the reason why I did that is because we spiked up higher in the pre-market. And I said, man, if this continues up higher on that CPI report, I'm going to be stuck sitting at a 75 strike with no more upside potential beyond that. So that's what caused me to make that move. I'm glad we did. And we got paid handsomely for that 90 strike. I couldn't believe they took my offer. So that's the gold mining stocks. Let's move on. Let's talk about silver. Silver pulling back, new daily low. However, we're holding support, and this is what it's all about. I didn't just draw these lines. These are the lines I drew as resistance many weeks ago. And now this is when they come back and they pay dividends. I don't need to do rework. I could see where a stock, a commodity, a currency should hold. Now what I want to see here on this 4-hour time frame is a breakout. And once I see a breakout and a pullback on the US dollar, what am I going to do? I'm going to be buying more silver. Same thing holds true for the gold mining stocks. Right now, we have covered calls paying us like a big fat dividend, and we'll wait out the storm. And the beautiful part, that dividend pays us every month. Let's take a look at equities. The S&P 500, and we're going to talk about Tesla, folks. I know everybody wants to talk about Tesla. The S&P 500 is down over 1/3%, down 15.5 points, 15.5 points down. I think we're going to rally here fairly soon. The question is where. We may have some support at 14.18. And I'll be looking to cover some shorts, not all. And we are short the market. We have been short the market for a while. There are some shorts that we use naked call options on. Shake Shack, the S&P 500. And those are profitable trades. Buster Stacks, SPY right on the 50-day SMA. Excuse me. SMA, for those folks not familiar with what that is, that's a simple moving average. Anything under this is likely short-term overshoot into 400, 404, fill the gap. We'd love a quick panic move to 400 or under, and then bounce to close back above 404 to protect 50 SMA. Yeah, it sounds like a logical strategy. You know, right now when you're in a free fall like this, I think it's great that you have a strategy in mind. Even if it doesn't play out to the exact penny, it's important that you are not you're not hoping when you should fear. So that's a good thing. You have people out there, unfortunately, right now that, and this is really a lesson learned, and I've been here, folks. The only reason why I bring up things is because I've done these things. And these are poor behaviors. And I'm not repeating them because it cost me a lot of money to learn them. You've been stopped out of a trade, maybe it's because your brokerage forced you to, or maybe because you just couldn't take the pain. You're waiting for the new opening bell so you can get back into the game. Bad move. Bad move. You're fighting the market. And I'm not referring to you, Buster Stacks. You've inspired me to bring this up. What Buster Stacks is saying is that he has a vision of where there might be support and what might happen. We do not want to go battling the market. The market is always right. We are always wrong versus the market. So let's not fight it. Let's not hope and we should fear. The market's going to tell us when we're right, and he brings up a good point. Corrections are never, I've rarely seen a correction that is over when you have bright green futures, meaning futures are up. They are usually always down, usually a lot more ugly than what we're looking at right now. And then you get that big bullish reversal bar to close positive on the day. We're not there yet. Maybe by the end of today, we will be. Maybe Buster Stacks is right on the money with his analysis, for all I know. I'm not that smart. So his strategy, his analysis may be just as good as mine. So I'm looking at the 4,000 mark, the 418, a range. The NASDAQ 100, also down about 1/3%, new daily low. What I want to point out here on the NASDAQ is this, is that, remember, this is a 4-hour chart. It's not insignificant, even though it is an intraday chart. It's not insignificant. It's not like a 15-minute chart or a 5-minute chart or even an hourly chart. You know, those fade a lot of times. They fail. Whereas a 4-hour chart is a little bit more reliable. Again, I didn't say this before. I'm not a day trader, so I like to use higher level charts, with the 4-hour chart being a primary for intraday charts. Now, what we're looking at here is no new 4-hour low. This bar opened up only a few minutes ago when we went live. No new low. We still have 4 hours to go here. Do we break? Because the first rule of a stock market or a correction finding a bottom is stocks need to stop going down. Doesn't mean they're going up right away, but they do need to stop going down and consolidate a little bit. This is as good a support level right now as I could find, right? Maybe if I pull back to a daily chart or a weekly chart, I'll find better. But right now, for the purposes of analyzing the pre-market activity, this will do. What I want to point out is that RSI bottomed out, believe it or not, back on Tuesday. And what we're doing now is we're putting in higher lows. This is the market possibly sending you a signal. Now, what we didn't do, and I expected this when I first looked at this, but my initial reaction, this is why we take our crayon out, we draw trend lines to validate our opinions. What we did do is we broke out here on, what was this? The 12th, yesterday. And we broke back down. That's a breakout point failure. We actually broke down below the lower band of support. That's not a good thing. The however is that we did not take out the lows of the 12. So yes, we broke out, we broke back down, but we did not take out the lows. So the trend is still positive to the upside. So yeah, we'll probably get a sell-off here. We may even take out this new lower low, the support level here. But the RSI is signaling to us that we may get a brief short covering rally on the NASDAQ 100. Longer term, what does that mean? We're not sure yet. We'll talk about it tonight, Thursday night, when we review the weekly charts and we see what kind of damage has been done. Right now, it's way too early. We have 2 full trading days left to go. Russell 2000, of which we are very short of. The Russell at current is down 0.41%, a little over 8.5 points. And we are very close. Overnight, we came very close to tapping the March lows. And as is similar to what we're seeing on the NASDAQ, RSI, and I presume the same will be true for the S&P 500, we're getting higher lows on RSI. Now, does this mean that you go taking your 401k and, well, you know, talk about that with your financial advisor. Does this mean that I will be, because I don't like to give financial advice or to have it construed as that, does that mean that I will be going in today and taking any liquidity that I have, any cash on the sidelines and putting it to work. No way. No way. Soon. Not enough technical damage here for me. I'm still bearish in the market. We do have some positions that we may take off into this weakness, some short trades using naked call options. Maybe we'll book those profits or offset those naked calls by selling naked puts, which are deep out of the money, and that creates an option strategy called a strangle. And all we do is we sit and we collect our premiums on the options. Now, what we have opened up, and we did buy some new positions, and one of them, actually only one, I should say, not multiple. One was natural gas yesterday. I've been talking about this for a while, how natural gas has been putting in new weekly highs. It's broken out. Where the heck is natural gas? And yesterday, we pulled the trigger. And it closed up relative to a market that closed down on the session. Now, every Thursday, this being Thursday, of course, we have natural gas inventories, which are reported. And that can move natural gas dramatically. So ideally, we see a draw. And the reason why I pulled the trigger is that Gretchen Whitmer, of the governor of Michigan, ordered the shutdown of an oil gas pipeline running from Canada down and into Michigan and through the central continental United States. I don't know if that's going to be reflected in this number, but it's certainly not going to help. Now, nat gas is down slightly this morning. Orderly pullback. Is this a bull flag setup? Maybe. And I'll show you what it looks like on a weekly time frame. To illustrate the whys behind, we opened up this trade. And this is not a day trade. This is a longer term trade. I'm a firm believer in the commodity super cycle. You're welcome, Buster Stacks. My pleasure, my friend. All right, so we're looking at a bull flag setup potential here. Ideally, we get a continuation breakout. The Bollinger Bands are beginning to widen out after consolidating very tightly. Now, taking a look at a weekly chart, you can see here, we were higher on the week, now we're lower. You can see here that we have a nice breakout. We've been putting in new weekly higher highs. And that this downtrend is now over. Now we're putting in higher lows. We have a beautiful W formation forming. Now what we're looking for is that burst up higher. And the real point at which traders are going to get the buy signal on natural gas is when we take out the pivot point breakout. Here's your pivot point. Here's the left side of your W, the center of your W formation, the pivot point being the top, the high of the week of the 15th of February, pulled back, nice orderly consolidation, continuation move up higher. The validation of this W formation is a breakout above the pivot point. So if we close above that mark, watch out for the highs of November. If those get taken out, you're going to see a massive short squeeze on natural gas. So That's our play for the next couple of months, natural gas. Getting back to the markets, what did I not go over here? Go back to a 4-hour time frame. Yields. Two things are driving this market right now, folks. Actually, three. Temporarily three. Normally two, temporarily three. One, yields. And they are moving up higher yet again today because the 10-year Treasury note is moving down. Two, the U.S. dollar. U.S. dollar moving higher. This is what the Federal Reserve, the term that Federal Reserve likes to use is transitory. I'm going to use it. I believe the move up higher in the dollar is transitory, temporary. When you print a whole lot of nothing out of air, it becomes less valuable. So the Federal Reserve has no intention of stopping the printing presses. In fact, they need to keep those printing presses going. They're backed into a corner. So if I'm a currency trader and I'm seeing the U.S. dollar hit resistance levels and I know that there's more supply coming on the market, what am I going to do? I'm not going to buy into resistance. I'm dumping into resistance. And that'll help our silver and gold trade. What else is driving the market? Oil. Oil, folks. Why do you think you have all of the shutdowns in the United States, pipelines getting shut down, conflict in the Middle East? All this wasn't around 6 months ago. Now all of a sudden it's around. Why? Oil prices are struggling. Even with the turmoil in the Middle East, pipelines getting shut down. Oil this morning is down over 2.25%. Why? Concerns about demand. And this is what's hurting the S&P 500. Because remember, only a few days ago, it was only the high beta names, excuse me, my voice is going. The high beta names, meaning Tesla, NEO, all the SPACs, all those things that were doing hot a couple of months ago are dead money right now. Yeah, maybe they'll bounce, but longer term, intermediate term, I should say, not longer term. Intermediate term, they're dead money. That doesn't mean they can't bounce. I think we've done about it. Let's check out gasoline prices. You know what's funny is I go over these charts, gasoline prices, agriculture prices, and we've been going over this. Those that have been watching this show or my Sunday and Thursday night shows, or you're a member, you've known for months that there is inflation out there. Our train, good morning. Good morning, Bob. I think SPY should test 398 and the Q's down to 301. The PPI number will not help. You know, you're closely aligned with what Buster Stacks said earlier. He had a number of 400. You could be quite possibly right, our train. The PPI number, if it comes out very hot, yeah, it's not going to be good. It's especially if it exceeds CPI. If it's perceived that the producers are not passing along inflation to the consumer, that's a major problem because somebody's got to pay that bill. That means their margins are going to get dramatically tightened. And especially watch the semiconductor stocks because they're all about margins. Retailers are on very tight margins. And one of the most highly inflated prices out there was, guess what? Apparel, made in China. China is seeing inflation. So very, very important inflationary data coming out today. What was it going to go to? Gasoline prices. They're coming in a little bit. Good to see. We have a lower high, but no lower low yet. So the trend is still to the upside. All right, screw that up. The beautiful part about this sell-off is I was reviewing the emerging markets last night with members on Market Wrap, And I'll tell you, the emerging markets rolled over on the strengthening U.S. dollar and weaker equity markets overall. And if we do get a washout here, the emerging markets are where I'm going to want to put some additional money to work to the long side. And I've been talking about that for months now. But we haven't really had the opportunity. Protein coming in a little bit. All right, so enough with the futures action. Let's take some chart requests. I need to go to the members area. All right, we have, no new requests today. All right, let's go over Tesla. This is not reflective of the pre-market activity this morning, folks. So just keep that in mind. So, the week is not over, right? So obviously that's unknown. But the reason why I say that is because a lot can happen between now and 4 p.m. Eastern Standard Time tomorrow. So at current, the chart of Tesla is a disaster area. Why do I say that? All you need to do is throw up get rid of all of the rays. Throw up your drawings. These are my annotated drawings. And you can see that we've broken critical support here on Tesla. The key to remember is that 2 trading days left to go, right? We can recover here. This is not in the books yet. Just like we recovered back here, we bounced back here, we could also recover here. So we may get a bounce here. If we do not get the bounce, excuse me, we come down here to around 545, 547 per share. And actually, this is a monthly chart. My apologies. We have a lot more time left. Weekly chart. Let's talk about the weekly chart. And pretty much the same idea here. We can still bounce back, same support levels. We could bounce back today, tomorrow, and reclaim these support levels. The key is to remember that if we fail to hold, we're coming down here. 545, thereabouts, give or take a point. So what I want to do is create an alert. I want to know when Tesla is getting ready for a bounce, because I'm not buying Tesla here. Even if we recover support levels, I'm not buying Tesla here. I want a discount. And I may do that vis-a-vis by selling naked puts or simply by waiting for the shares to come to me, one of the two. But those will be deep out of the money puts. When I say puts, I'm selling them. I'm the casino. I'm not the gambler, so I'm selling them. I'm financing it. So time decay is our friend. I'm also going to want to know if we break through it. If we break through the support level, this market's in a lot of trouble. I'm going to keep this active for quite a while. I've kept some sensitivity on here because I want to know when we're in the range. That's that purple haze around my alert line, support level, daily chart. Yeah, and you could see here that we held support on the 11th, attempted to recapture both support levels yesterday, but failed. We were rejected. So that leads me to believe we're probably going to head lower here on Tesla. That's not a bad thing. If you're long of it, I know it's a bad thing. But taking it from somebody that doesn't have a position, it's a good thing. So right now, the key is your capital reserve, folks. Wait for these trades to come to you. Don't hope that they're going to hold support. This is not a candlestick that inspires hope. It tells me that we're probably going lower in the pre-markets. We already are. Our train. Will ARK be on a long-term bullish trend? Not for a while. I think I'm not a fan of Kathy Woods. I don't know what her deal is. I had never heard of her 6 months ago, and I started watching some of what she was doing, and when she started buying Tesla near the highs or adding to it near the highs, it's 10% of our portfolio. I looked at her positions yesterday, and then I saw she was buying Coin. I believe she bought it when it IPO'd. I was not impressed with that at all. That tells me there's a bit of arrogance there, that she sees the future. And frankly, it goes back to my old adage that, hope is not a strategy. She's hoping that the most volatile stocks and the most expensive stock market since the dot-com bubble in history are going to outperform. That's nonsense. That's nonsense. And I said it when she was buying Tesla, and I'm standing by it now. Look at Coin. Her strategy is fine in a declining interest rate market, but it's not so good when yields are rising, inflation's rising, and you have rising unemployment. So we have bounced off of the lows of the 6th. I think that this is a bear flag setup. Bitcoin took it on the chin last night. I don't know if that's going to be good or bad for Coin, but it looks as though we're going to break here and go lower. Is she going to buy more? I mean, the first rule of trading is don't average down until, of course, you see a nice, crisp, clear bottom. This is not a nice, crisp, clear bottom. This is a bear flag setup, probably setting up for a continuation breakdown at worst, at best, a higher low on a pullback, and potentially a W formation, and then a breakout. But right now, that's all speculation. You got to hope that happens if you're buying this stock. So I have a lot of issues with her. A lot of issues. Technically, in terms of education, I'm sure she's very smart, whatnot, but put a chart up for Christ's sakes and learn the history of the markets. Anyway, I digress. Any chart requests? Hey, Trent, how you doing, man? Stag? Hopefully that's a symbol. You're not telling me to go to a stag party with you? Stag Industrials. Ooh. Trouble here. Weekly chart. Automated trend lines, folks. They're your friend. Save time. Click of a button. Yeah, we've broken support here, Trent. 2 trading days left to go, but it's not looking good. We undercut last week's lows. We're down about 5.25% on the week. The trend is, let's say, very close to a broken trend at current. If we do not bounce back, it's a broken trend. Daily chart. We gapped down yesterday. They attempted to rally it back. We broke not below 1 support level, but 2. I would avoid this stock. It's probably going lower. We do have some support down here. Volume did drop off to the downside. I would not be a buyer. You may get a rally in an effort to try to recapture these support levels. You see that quite often. It's just like when you get a breakout, stock pulls back and retests the breakout point, resistance point. Now should act as support. The opposite is true here. What was support should now act as resistance. So I would not be a buyer of these shares. Just be careful. All right. What else do we have? Any other symbols? I'll take one more. Pool. Good company. But they're not immune to the sell-off. This made it onto our watch list a couple of months ago, and had a really nice setup. It did break out. We did see a breakout. I wasn't a part of it though. What I like to see here is a retest of support at, let's call it $401. I'm going to set this up on a weekly time frame. Now you can see the automated trend lines here. I'm going to take it off. And I didn't see this on the monthly chart. Picked up support where we closed yesterday. And it was resistance back here, support back here. Now it's acting as support yet again. If this breaks, we're coming down here to 401 per share. We'll set our alert. I want to know if we break through it, touch or bounce. And we'll keep this active for about a month. Daily chart. You can see on a daily time frame, again, I'm going to take the automated trend lines off, throw them back on. We have support down here, potentially on a daily time frame, and let's call it 414 per share. Does it hold? Not quite sure. The markets will tell us. And if this one fails, if this daily, weekly and monthly support level fails, we may just fill this gap here. And that puts us down with a 3 handle. 390, let's call it 393, round it up a little bit. So I'm not going to set up an alert down there yet. We'll see whether or not this support level holds here. But we do have a big gap to fill. So I would not be in any rush to go building a position here. Watch for your consolidation. I wouldn't buy in the first bounce. It could bounce and then roll right back over again and break. So just be careful. All right, folks. You're welcome, Train. Folks, everybody have a profitable trading day. Remember, hope is not a strategy. Your capital reserves are everything if you want to survive in this business, and that is exactly what this is, a business. Join us tonight, Thursday night, futures live. Thursday night stock charts live, 6 p.m. Eastern Standard Time. We'll go over the weekly charts, and it'll give us an early warning peek of how we are poised to close out the trading week, and that's when we identify how do we want to get positioned for the new trading week. So join us again, 6 p.m. Eastern Standard Time. There's an email list below, 15 minutes to a half hour. You can get notified prior to us going live. And again, everybody have a profitable trading day. Be well.